So before going to that, we will review what we said yesterday, both in Nifty, Bank Nifty and Reliance, because these three were picked yesterday to give illustration on the Fibonacci system of trading. Now we will straight away first go to Nifty. What happened? We said unless it crosses, that is, you should buy only about 18,155. That's what we said. Okay, if it's going to cross 18,155, then we'll go for a buy and keep 18,060 as a stop loss. Now otherwise, if it is in a counter trend, we said we can buy at 18,020, which is the 50% retracement, and then 17,980. We said at these two levels we can buy if there is a counter trend. Today, towards at around 3 o'clock, it came to 18,019-20 levels. It closed at 18,027. So today it did not give a proper opportunity because we couldn't have gone long since there was no break above 18,155. At the same time, the counter trend type of buying came only closer towards the end of the day. So probably we could not have done anything, but there is no loss because what we wanted to do did not materialize. That is fine. Okay. So we look at Bank Nifty. So Bank Nifty, it was clear that we said no, we should look towards going long if it starts to break even this high, right, of 42,555. If there is a sudden spurt above that, and that is what happened today. The open itself was 42,000, closer to 373.80, but immediately it jumped above 40,555. We said you buy at 42,555, and then in that case we said we'll put a stop loss now at 78.5% retracement from this level to this level. That is from here to this level. Okay. So our stop loss now comes to at 42,332. So 42,332 is our stop loss. So we said we can even hold it for a position trading in case if it happens. So right now our position is running with a stop loss of 42,330. So this is as far as Bank Nifty is concerned. We are long, stop loss not triggered, but we could have got a profit because once it started to go above that, we said at 300-400 rupees from this particular level you can take the profit, and it went up to 42,708. So even if you're not taken profit, stop loss is still not triggered. And also we should look at, it was a gap up as far as the close is concerned. So yesterday's close was 42,298, and today the open itself was 42,516. So as long as this particular close is not breached, we can maintain our long, which is also approximately equal to the 78.5% retracement of the move, of this particular move which I am highlighting. So 42,330, approximately on 42,330 will be the stop loss for any position trading that we may be having in Bank Nifty. Now we will look at Reliance. Yesterday we said Reliance on a daily chart, we said that no, this is a it went up, and so we said this low being broken. Since this low has been broken, we should expect that no, any rally should stop at this 78.5% retracement of from this high to the low, where I am pointing the hand symbol. That is 2481. So we said very clearly that as long as 2481 is not breached, there is a good chance that it can come down. So we had suggested that no, in case if it goes about 2481, you do that with some stop loss at 2455, or if it cuts on the downside again below 2455, 2460 levels, you can go short, keep 2481 as a stop loss. Now it happened, and then it came down closer to 2440 levels also. So intraday, definitely there would have been a profit as far as Reliance is concerned. So today, with all the three things which we reviewed using Fibonacci, a simple mechanism, we got profit in Reliance. We are holding on to Bank Nifty with stop loss. And Nifty, it came only towards the closing hours, so we could not implement it. Now we will look at what needs to be done as far as intraday is concerned, as far as Nifty is concerned on Monday. Still we have the same 61.8%. If it goes a little lower, we have 17,980, and then we have got a 17,930 also. So our next places to buy Nifty will be 17,980 and 17,930. So these are the levels. In counter trend, if it's going to go to this level, we will go for a buy. We'll go for a buy. Okay, and the stop loss will be below 17,930. Stop loss will be below 17,930. So if we buy on these two levels, we may be averaging at around at 17,955 or so. Keep a stop loss slightly below 17,930, and write your profits. Then we also said that normally we see the Nifty pattern with an 100 points movement on either side. That is, once it starts to cut 100 points from a low or 120 points from the low, then it turns bullish for some more steam. Similarly, if it cuts 110 points from the top, in that case it starts to go down a little further. So right now, if depending on where it is going to go, whether it's going to 17,980 and from there it is going to rise, or whether it's going to go to 17,930 and then going to rise, there will be an 110 points from that level where you can look towards taking profit. Now already it has come down to 18,020, right? So today it has come down to 18,020. So if it is going to go on the upside, then in that case we should look at the 71.8% retracement from 18,179 to 18,020. So this could be the place where probably we could be looking towards having some problem. So this is 159 into 0.235. We will lessen from 18,179. So 159 into 0.235 is on 37 points. So 18,179 minus 37 points, or 40 points we keep, 18,139 or 18,142. So big resistance now, immediate resistance will come closer to the 18,142. If there is going to be a spike tomorrow in the open, let us say it goes a little bit higher in the open, so we should be prepared for both scenarios, market going on the upside, market going on the downside. If it goes on the downside, 17,980 to 17,930, be a buyer. If it goes straight away to 18,142, then in that case you can look towards straight away from here, that is, it just moves up from here, then in that case you can look towards going short very closer to this. It need not be up to 18,142, it could be slightly even lower, 18,135 levels or so itself can be some sort of a resistance, and only if it starts breaking that level, then I think probably the trend is again turning towards the upside. Right now we are looking towards the situation where the market is already on the slightly on the upside. There's an overall sideways motion, but the trend at 17,885 there is a bottom. So we are seeing some higher tops and two higher bottoms. So we expect that probably the next bottom that we are going to get will be above 17,885, which could be closer to 17,930, 935. Only if that is going to be broken, then probably whatever that happened till 18,179, that view of bullishness will be aborted. So right now on the downside, we still feel that the 17,970 to 17,930 levels where you should go long, and immediately if it starts to go up a little bit straight away, let us say on Monday it opens from here and goes higher, then any spike will meet resistance closer to the 18,135 to 140. And I also told you something like 110 to 120 points, there is always some resistance which comes. So which means around 18,130, 140 we could see some resistance straight away. So if you see something like that, then in that case you can go for a sell between 18,130 and 142. Keep 18,180 as a stop loss. Okay. And so the view is that if it goes straight away from here on Monday, 18,000 approximately, I'm saying, because we can't exactly say which point it will be. Stop loss will be 18,180. Okay. First profit target will be the same 18,065 or so which we got. Okay, 18,065, 18,020. Okay. Now suppose on the counter trend, if it goes down, then in that case 17,970, 17,935. Okay, these levels buy. Stop loss below 17,920 or so you can put, and the profit target could be under 110 points from this particular move, from wherever it comes lower. If it comes to 17,950, the profit target could come closer to 18,060 or so. Okay, so this is how we can use the Fibonacci, so that you can keep all these things available already with you. When the market opens, you can implement all those things. Second aspect is that we can combine this. Later on we'll see we can combine this with the normal pivot points S1, S2 pivot point, R1, R2. We can look at the Fibonacci combined with the pivot points to probably fine tune a little bit towards profit target for intraday. Now this being over, we will move to Bank Nifty, and then we look at the stop loss and the overview of the market. Now Bank Nifty, we've already said that we are still on the long side of the market, and we should be looking towards as long as it doesn't cut 42,330, so any dip that we know today, say today it stopped at 50%. So if it goes down to 42,410 to 42,330, so the next buying point as far as Bank Nifty is concerned, intraday tomorrow on Monday will be 42,410, 42,330. So this is the range in which it can be bought. And normally Bank Nifty has a first move up around 300 points. 300 points normally you get again. So if it cuts 300 310 points, then it starts to move up again. So 300, suppose if you do that, then in the case from wherever it falls, so let us say it comes to 42,000 for 370, 380, then the profit target will be plus another 300 points initially. So it could be 42,670 or so. Initially it could be 42,670 or so. So Bank Nifty, please do that, because Bank Nifty also looks to be a little bullish, on the bullish side. And already we had talked about Reliance and other things. So we will now pause, go towards, and then come back after looking at the topic of the day. Now we have already, first is what is the stop loss. So stop loss is very important as far as the market, as far as trading is concerned. For investor, probably stop loss is less important, because he can have a strategy for investment. Strategy of investment means, what I'm saying is that every dip, either time based or price based, or a combination of both, he can decide to invest either in the stock or through an SIP in the stock. Okay, so that way they can do the investment. Now as far as trader is concerned, since now you are looking at a very tight money resource, because mostly the traders, most of them become traders because financial resources may be a little bit constrained compared to an investor, because an investor can easily invest 10 lakhs, 20 lakhs, 30 lakhs, wait for time and do that. But suppose if you have only 1 lakh or 2 lakhs, but you want to replicate a style of success of 5 times or 6 times of that money investment, then normally you have to go for some trading, because if you get an investment profit of 12% per annum, then in that case the trading should give you 30-40% per annum for the resources that you're putting. That's why because if it is going to get 12 or 15 or 18, there's no point in doing that. Then there's point of going only for investment. So can you beat an investor? If you have that sort of trading skill, you can as well decide about it. But you have to have at least 2-3 times of the normal investment profit. You should be in a position to get in trading. But for that, you have to also have a stop loss mechanism in place. Okay. So otherwise, if you don't have a stop loss and you feel, let us say you got invested in Nifty future as a trader, and then you don't put a stop loss, and then it comes down, then you keep buying at some interval, then again a further decline you buy. So all those, then because you hold and then take profit at some stage, that is an investment style that you cannot call as exactly a trading style. That is an investment style. But normally a trader, when you talk about a trader, the trading plan will also have a stop loss. So what type of stop loss that you should put? That is very, very important. Now the most biggest frustration comes in stop loss execution, because the moment the stop loss gets triggered, after that there could be a little bit of fall, and then it will start to rise. If you're long, you're putting a stop loss, then in that case, after triggering the stop loss, it goes a little higher. So you need to know that what type of stop loss you should put. And second thing is, what type of stop loss you should put not to get whipsawed also, because that is say your stop loss is triggered. Then after that you are being forced to buy. And if it keeps too much of frequent trades, then both cost wise as well as time wise, probably that may not be very suitable for you, because a lot of traders have that mentality that no, we should have profits, but at the same time we should have a good winning ratio. 70 times, no, 7 out of 10 times we should win, and we should have a profit. Suppose if I say 4 times out of 10 only you will win, but still you will make profit, then 6 out of 10 times when he loses, and if there is a string of losses, they get frustrated and they leave the trade. So you have to determine according to your trading style that what type of stop loss that you should put, so that you do not get whipsawed. Now one thing that which we illustrated even in the case of Bank Nifty, yesterday we said that if you're buying above 42,555, okay, your stop loss right now it has already gone on the upside, so the stop loss now comes at 42,330 or so. Okay, so this is 225 rupees. So into 25 in the case of Bank Nifty futures, something like a 5,000 rupees per contract. 5,000 rupees per contract. So are you willing to accept this, or you don't want one particular contract? Then in that case you have to ensure that you go for a pair call option spread in the case of Bank Nifty, in order to reduce this quantity of 25 to a slightly lower thing. So you can either go for an option, or you can go for so whatever that you want to do, you can think about that. But let us say this is what your stop loss is. So why is this stop loss? How important is this stop loss? You should put a stop loss where probably the trend changes in the near term. The trend changes in the near term, at least for a one in that day or in a couple of days. Probably the rally will not be heavy after hitting the stop loss. So that should be your intention. So whether it's for intraday or whether it is for some other for position trading. Now why this 42,330 in Bank Nifty is a stop loss which is important for a trader. Now we have already highlighted that is the 78.5% retracement is what most of the traders will look like. Now see, this is a move. It has broken the previous high. So even in a daily chart, if you see, this was a high, this is a low, and then this is a new high. That means we are getting higher highs. So as per the Dow theory, we should probably look towards a lower low. We can say that in an hourly chart, probably there is a lower low. But we are trading in a daily chart. Okay, so though you are a intraday trader or probably position trader, you are looking more at the daily charts. So now where is the stop loss that is coming? We have decided that we should put the stop loss at 78.5% retracement of the move. At 78.5% of the retracement is where our stop loss should be. That should be the that stop loss may work out much better. So not that every time it is a remedy for all, but definitely that stop loss can be more effective than looking at stop losses on a 5 minutes, 15 minutes or 1 hour basis and probably get whacked, because you don't want whipsaws also to happen, right? So what are the your parameters should be? What are you have decided that you should have less trades comparatively, okay, more winning trades. So this is another thing, and right on profit. Okay, so this should be satisfied for any stop loss condition. Okay. So one of the mechanisms that we get, of course there are different ways. Now you may be looking at moving average also as one stop loss, but this is all numbers. This is a pure number thing, so you don't need much of a chart help also. So here, based on this, the stop loss that is going to come will be the 78.5% retracement of any move that has happened. So that is the stop loss that you can put one. Assuming that this seems to be a little heavy because you don't want this one, so you would like to have a trailing stop loss. Now this is a stop loss of the entire position, so you would like to have a trailing stop loss. Okay, so the trailing stop loss need not be 78.5%. It can be either 38.6% or 23.5%. So the first ratio is 23.5 and second is 38.6. Normally most of the time markets bounce from this level. So what you can do is, probably you can use either one of this depending on your convenience, and then look towards again buying. Now say let us say 38.6% retracement, assuming that you are a trader and of a very short term thing. Say today it went above 42,555, right? So today we decided that we will go above 42,555, and we will put in a stop loss of 38.2% retracement. Let us say we have decided that. Then in that case our stop loss will come at 42,525 itself. So probably you would have got exited today at 42,525. Then you will be looking towards buying again at some lower level, because you bought at 42,555. Now let us say it comes to 42,410. Then even with the stop loss, your net effective position will be, so let us say you have decided this, and today it got it was over today. Now tomorrow it comes down to 42,410. Okay, so you decide to buy. So what is the loss that you had? Some 30 rupees or so earlier. So your effective position is going to come down to 42,440 from 42,555, right? So you are using a trailing stop loss which is not at 78.6%. So the profit target that you are not going to go short. See, the question is right now, it is a question of taking the profit, waiting for a dip and then buying it back, right? So that is our intention. So now not to go short on a fall below 38.6. We can only go short if it breaks the 78.5%. So what is very important is that we are first taking the profit on a fall which is below 38.6%. So depending on how big the move has been, some people can use even 23.5%. Okay, 23.5% or a 38.6% thing that can be used. And as I told you that there is chance that probably the bank nifty normally looks towards something like a 300 points of fall that happens before a trend reverses. So probably what we saw at 42,710. Now the first important support can come between 42,400 to 330. That will be that 350 points of fall. So mostly we may have a support at that place, but you want to exit at the earliest. So you have exited at 42,525, not knowing what is going to come tomorrow. So today you are an intraday trader. So you went up above 40,555. If the trend had been good, probably you would have gone with the trend. But today what happened is it went up but did not sustain. It had a slightly poor close, comparatively. So you wanted to exit. So the exit level was 42,525. So you exited at 30 rupees difference, and tomorrow you don't mind looking at it tomorrow on a fresh basis, because 30 rupees in bank nifty is a very small amount of loss that you can bear. Similarly, the nifty also we are looking at a 38.2% retracement. Similarly, let us say the stop loss 38.2 retracement came closer to the 18,058 or 60, right? So what you did is that any long position which you might have entered earlier, now you are looking towards making an exit. You are now looking towards making an exit, because whatever that you bought at whatever level probably earlier, okay, now you might have bought it probably this was the let us say you might have bought it at this place. You could have bought it at this place, okay, or you might have bought it at say 100 points. I told you from this low level 17,950 or so you might have bought, because the low was 17,853. Let us say you bought about 17,950, 960 levels. Whatever you did there, now you're going to get down at 18,060 and come out. 18,060 and come out. So this way now you are now looking for a dip, and then on a dip you are going to buy. Okay, so that is how normally you can keep your profits well taken, and shore up your profits, and then wait for a fall and then go for a buy. So what the system trading plan that we are going to have is, now the trailing profit will be taken at 38.2% retracement. Okay, this is a trailing profit. Okay, so if you are already long, 38.2% of the move, 38.2% retracement of the move. Okay, so this is where the profit, this is where we will look towards exiting our position. The new entry position without the trend being broken will be between 61.8 to 78.5% retracement. It will be in between this. So you make an exit, you get into an entry, and then you will put a stop loss below 78.5% at some level. So based on this, in Nifty, right now we exited at 18,060. We are looking towards buying at 17,970 to 17,930 and putting a stop loss below 17,930. So the effective stop losses that we are going, we have decided is a trading stop loss at 38.6% retracement, and the trend reversal will be confirmed only if you are looking at something like a 78.5% retracement of the entire move. So this is our idea of keeping this trading thing. So how do you, so from that, which the question is the which move you are going to take, that is most important. So the move that we are going to take is from the last low close. So from the last low, from the last pivot low, if you are long, from the last pivot low to the recent high of the market move, recent high of the move. Okay, so last pivot low towards the recent high of the move. So this is the move for which we'll do the retracement. Now let's look at the Nifty and Bank Nifty. Now Nifty daily chart. So this is the low, right? This is one low, pivot low, in the sense that because this is a close, this is a low close. This close is lower than the previous close. Okay, this close is lower than the previous close. So if I put the line chart, probably it will be clear for you. See this close. This close is lower than this close, right? So we are doing the retracement from this place to this place. Normally we should not see a fall which is below this high, which is the 17,940, 950 levels, because that will look towards wiping out the this particular trend and will be putting it in a sideways motion again. So we are keeping that 17,940, 950 or 930, which we talked about, as the most important level below which we'll put in the stop loss. So this is as far as the Nifty is concerned of the particular move which we are looking at it. Bank Nifty, we look at it. Bank Nifty also in the line chart. So we are using the same, see this particular low, because this is the move which we want, right? This move to this high which is happening, for which we are going to put, for which we are putting the retracement. But today, since it is on a close to close, because we have put it up to the pivot high. Now it is from, if you look at it, this close is there, and there is a close. So normally, you put it from the pivot low to pivot high, to the recent high. Now on a close basis, since this is the last pivot close, we are taking the retracement from this pivot low of this close to the recent high. Based on this, we have worked out the Fibonacci, right? So now in the case of Bank Nifty, why are we looking at this trend? See, this high is greater than this high is greater than this high. This high is greater than this high. So every time you see the market stopping at 78.5% retracement, it's not going below that. Let us say. So we will on a close basis itself. Let us if we do the Fibonacci. So it does not cut below the 78 point. It is between 61.8 and 78.5% retracement. So we will remove this. Now we will look at the Fibonacci from this place to this place. Again between 61.8 and 78.5. It didn't cross 78.5. Okay. Now we will draw from. So this time it did not even cross 50% retracement. It did not cross even 50% retracement. So now for this particular move, we are looking at this. So suppose if you instead of pivot I, if we look at the close to close basis, then we can. Even then 78.5, 78.6% retracement on a close basis is below the 42,362. So it may not cross 362. It could be between 450 and 360. That's what the market could be. So anything below 450, 460 is a decent level for us to go long. Okay. So this is the Fibonacci retracement stop losses of 38.2% retracement and 78.5% retracement for getting into a long, as long as the trend is not broken. 78.5 means I'm saying get an entry between 61.8 and 78.5 and put in a stop loss below 78.5%. If you've done this, probably in all these places we would have exited at slightly higher level and we would have got it here. Only in this case we would have exited, but we would not have got. But suppose if it is not coming below to 16.8 and 78.5, then if it starts to rally, also we should be looking towards a buying if it starts to go above the 78.5 retracement of this particular move which is happening till then. So we are long, and even before 42,525, and right now we are going long with keeping that 42,330 as a stop loss, looking for a re-entry after making an exit today at 38.2% retracement. So this is as far as the Bank Nifty is concerned. The same thing, whatever that we discussed, the same application of stop losses come in all the other stocks and equities. So now we look at the one stock. We look for the then we look at the overview of the market today. So let's look at ICICI Bank. Okay, now ICICI is now slightly after its recent fall, we are getting higher highs and higher lows, right? So we are getting higher highs and higher lows. Now let's look at this place. Now from this place to this place, we will draw the Fibonacci. See, again it came between 61.8 and 78.6% retracement, and it has started to move. So this was 865. Now the close has come to 870 levels. 870 levels. So now if it is going to cross this 870 where it is right now, if it is going to cross this 870 level, then in that case no, we should be looking towards going long, and probably keep from this place, because this is the last important low, right? So from here to whatever that happens here, we should put in a stop loss at below 78.5% retracement, a big stop loss. But the retracement stop loss should be, profit taking should be at 38.2%. Profit taking should be at 38.2%. Now let's look at the same place here. Now let us say this was a low. It went up because we are getting higher highs and higher lows. It did not go below 78.6. So let us look at what we will do intraday as far as ICICI is concerned. We will expand this. So this low is there and this close is there. It is 870 and this close is 866, right? So we now expect that there will be no close below 866 immediately. Okay, so we expect something to be 867, 868 to take the support and help ICICI to go up again. But 870 right now, which is there, is the is an important level, and a close above that 870. Now then we are looking towards a further steam higher as far as ICICI is concerned. So this is this one. So we will look now at the one or two charts. Probably we look at commodities also. Gold. Okay, so now gold on a daily close basis, what we will do is that we will put a 38.2% retracement of this move. Right, so that comes at 1921. That comes closer to 1921. Okay, so any fall, probably first support should come closer to the 1921, and the biggest thing should be at 1909. So only a reversal below 1909, I think, probably could look as if the market has topped out on a daily chart. So the 1910, between 1914 to 1910, 1909 is a place we should watch for a trend reversal as far as gold is concerned from its recent move above 1930-32 levels. The first trading stop loss is going to come today at 1921 in gold, and probably it can take support closer to the 1920-21 levels today, and then slightly try to make an up move. Then there is a chance that probably the up move can also extend itself from that level also. But in case if it falls, we are keeping 1910 as a fall, much bigger fall below 1910 as a place for a stop loss on a daily move, for the move which started probably looking almost from this level, right? Almost from the 1775 levels. this will be the first time that probably we will be looking towards a place where probably the market is going to get into the slightly bearish territory on a fall which is below 1909 or 1910. Okay, so this is how we use the Fibonacci both for trailing stop loss as well as for bigger trend reversal place. Now we will move ourselves to the present view of the market. Now Nifty, to look at it, remove all this. So this is a very this has become quite range bound for the last for 1 month now. If you look at it, since December 23rd, the fall which took place up to December 22nd. From there, the movement has been quite range bound, from 17,800 to 18,250, but mostly it has traded between 18,150 on the upside and 17,800 on the downside. So 17,800 to 18,150 has been the general range, with occasional slip below 17,800, and one time it went above the 18,200, 250. Now, what we need is a very clear hit above the 18,250. This is the has to be a close which is above 18,230. Now, if there is going to be a close above 18,230, then we are looking towards probably expecting that this correction which happened right up to 17,750, 780, that is over. Now, earlier also we have said that normally the Nifty has a tendency to correct by around 5.5% or around 1,000 points. Generally, it happens. Now, if you see this close, which was 18,810. So, if you take a 5.5% fall, 18,810 into 0.945. the close is 17,775, right? So this close, which is the lowest close, is 17,806. So it is holding out to that 5.5% move right now, and so it is probably, we expect that, as we told you that earlier also, that this seems to be some sort of a consolidation and a trend line if you draw on the close basis with this. Okay, if you say many times this is held. Okay, so this is held. So probably this time also it can hold. So any fall, bigger fall, we expect 17,910, 910, 915 levels itself can hold right now for a on a close basis for the trend to move on the upside. Now here we have seen that there has been no remarkable up move above the 18,250 260 levels. So 18,250 260 has to get broken, has to be broken if we have to think about a sustained up move on the upside. So this is as far as Nifty is concerned. So the suggestion is that if you get closer to 17,910, 912 or 930, looks to be a decent buy with a 17,775 as a stop loss for a position trading. So you can look towards going long with only 125, 130 points, and then probably you may get a good amount of profit if that's going to be the bottom. So as far as this is the view that we can have, 17,775 looks to be a very, very important support. 18,250, 260 or 230 levels on a close basis looks to be a very important resistance. And if it falls now, the trend line is likely to give support closer to 17,910, 920 levels, and then chances that it can move itself on the upside. So now we will look at the Bank Nifty view. So Bank Nifty, let's look at the close basis. See, this trend line is holding on a close basis. So then we'll draw the trend line on the upside. So there seems to be a, what we call as a symmetrical triangle. If you look at this, this looks to be a symmetrical triangle. There's an A, B, C, then probably it could go to D a little bit, then it could fall. So what probably can happen as far as Bank Nifty is concerned, it can go closer to this trend line, which is the 42,900, 42,950, 960 levels. So from here it can rally by another 450 points. So closer to the 42,900 levels, we will see a very tough resistance coming. So it has to break that to get out of this triangular consolidation. So 42,900, 950 is a very important level of resistance for Bank Nifty if it comes to that. Then same thing applies that as far as the lower side, this seems to be holding. So we have that 42,000, probably 240, 42,250, 260 levels probably can hold. So that's why more important is this particular low is very important. That is 42,167. So it has to be more than that. So probably 42,300 levels. So I would put it around 42,300. So the immediate range that we expect Bank Nifty could be is that 42,300 to 42,900. Okay, this is based on the triangular consolidation that's happening, and this has to be broken for it to really establish itself on the upside. And the on the downside, of course, if the trend line is broken, then on the downside also we have to go on the bearish side. But this is also a 5.5% retracement, which we have already talked about. Suppose if it is 44,050, so 44,050 into 0.945 is a 41,625. So this is 41,668. So on a close to close basis, very clear that we are establishing that 5.5% range right now as far as the bigger indices are concerned. So we should be looking towards hoping that this level will not be broken, at least for the time being, which probably if it's broken, another 1,200, 1,300 points of fall in Bank Nifty is possible. So let's hope that for the bull side that 42,300 will hold, and for the bear side they can take a view that 42,900 could be providing resistance as far as Bank Nifty is concerned. So what you should do as a trader, you should be looking more towards buying on dips towards 42,300, 310 levels. One of the thing which we highlighted earlier, so that seems to be a decent support. And if you want to make an immediate profit target, keep 42,000 because this is today it came the high was 42,700, right? So we'll look at the bar chart. So today it went up to close. So the close has to so the close has to come closer to the 42,900 for us to get into some sort of a run into resistance. Based on this, we have drawn on a close basis trend line. So we can, if you want, you can redraw it for this one. That is the low. Okay. So on any days, the advantage of drawing this line on a close basis is if there is a low or high which penetrates that, then probably it becomes like oversold if it breaks this line, and you can buy intraday expecting the close to be higher. So this is what happened here. See, if you look at the this one, these 2 days, it happened that this there was a low which is below the trend line, close trend line. So immediately that became a decent level to go for a long. So on a close basis, if you see this line is holding, so which means we should expect that the close will not be below this low, which is the 40,234. So a 78.6% retracement of this move, which brings it down to 40,300 to 400, is a good level to go for a long for a 700 point likely move on the upside on a close basis. So this is the view that we have, and any stock specific, it's now so we have ICICI, we have already seen Reliance, we have seen. Let's look at one of the IT stocks, TCS. So TCS right now it went up to see, this is a very important high, 3480, and from 3480 now it is having let's draw the Fibonacci. So 71.8%. Now we are also, you see, 3410. So 3410 is providing a very important resistance right now. So chances that if at all there is going to be a dip, it will also move up to 78.6% retracement of this particular move. Can take place. So it could be, it can come down probably to 32, 35 levels. So you could be looking towards going on the long side. If TCS comes closer to 32, 35 levels, 32, 35 levels is a place where probably we can look towards going on the long side as far as TCS is concerned. Probably from there could be a move on the upside. So the 78.6%, again we are able to reiterate, you can see, of this entire move, probably looking towards on the rise being resisted. So for a smaller one, we can put the Fibonacci from this level, which is 33.22. So the first one support comes at 33.22. If it starts breaking 33.22, then probably this trend is aborted of higher highs and higher bottoms, and we should be looking towards a move which could take it up to 32-35 levels. Okay, so this is all for the day. So if you have any questions, please ask. Thank you very much. So hope you enjoyed this webinar. So kindly practice this so that you will both enjoy practicing it as well as implementing it. So if you have any questions, you can ask even during our webinars in coming webinars. So thank you, and safe and happy weekend. Thank you very much. Bye.